Yes guys, so welcome back. We were discussing about the transition to IND AS and the ITFGs related to that. We will continue with the same discussion. Today, we will also complete the concept of transition to IND AS along with certain ITFGs on computation of net worth. We have seen net worth criteria. We've also seen what is the inclusions and exclusions in net worth. But we'll also come across certain ITFGs on net worth which deals with peculiar and critical situations. Now, today, apart from this, we will also have to cover a little more concepts relating to presentation of financial statements. Preparation and presentation of financial statements is the primary topic or the first topic. So first, let us complete the ITFGs related to transition to IND AS. Now, when I'm looking at this ITFG, I'm continuing from where I left off in the previous session. Applicability of IND AS in case there is a change in the status of listed company or the company which is in the process of listing or a listed debenture issued during the year. Now, when we come across this peculiar topic of listing and when we come across this topic of listing, one should know what is the process of listing and how does IND AS apply to enterprises which are still in the process of listing and not yet listed. Let's come across this topic. I'll first deal with what is process of listing, guys. When I come across this concept of process of listing, now you need to understand that listing is not a one-day process. It is not a GST registration which you apply it at the beginning of the day and you receive the GST registration at the end of the day. But listing is not as such, because the first listing should start with the board resolution, then goes to members' approval in the general meeting, then I will move into the concept of drafting a prospectus, it involves a lot of things, guys, when you're drafting the prospectus, because you have multiple situations or multiple things which come up. First one, what is the price at which? So there is a floor price and cap price. Also, you have to go into searching for a merchant banker. Also, if you want to go for an underwriting, this prospectus, whatever we have drafted, should get into the hands of SEBI, who will check for all the listing documents. And once the approval is sought from the SEBI, then there is an approval for listing. And issue of shares. I've cut it short, guys. A lot of steps I've cut it short because I just tried to fit in to help you understand that the process of listing is a pretty lengthy process. It does not happen over a day or over a couple of days. It is a series of transactions or a series of events which occur before we come across this approval for listing from SEBI and where the issue of shares actually happen. So since there is a considerable period here, any enterprise which has passed a valid resolution by the board for listing shall be considered as a process of listing. Now, how does this process of listing affect the applicability of IND AS? So what it says is, either an enterprise which is listed or in process of listing securities of an enterprise, either if they are listed or in the process of listing, either at the beginning of the year or at the end of the year, shall be considered, shall apply IND AS if the net worth criteria is satisfied. Or I can say rule 4 is satisfied. So not just a company which is listed, but even such company which is in process of listing either at the beginning of the year or towards the end of the year shall start applying IND AS if the criteria for net worth, which we have already discussed in our phase 1 and phase 2 category, if they are satisfied, then I'll have to apply IND AS, right? Now, let's look at what are we talking about in this given question. In this given ITFG, if I look at what it says, XYZ is a company which has a net worth of less than 250 crores. Guys, irrespective of the net worth, if a company is listed or in the process of listing, shall apply IND AS under phase 2 as on 31st of March 2017. When the status of application of IND AS is in the following scenario. What is the status of application of IND AS in following scenario? So let's see the first scenario, point number A. The company is in the process of listing. As at the beginning of the year, that is 1st April 2017, the company ultimately gets listed at the end of the year, March 2018. Guys, first of all, XYZ Limited is having a net worth of less than 250 crores. So primary thing, it does not belong to phase 1 category. It would belong to phase 2 category even if the net worth is less than 250 crores, if the equity or debt instruments of this enterprise are listed or are in the process of listing, either at the beginning of the year or at the end of the year. Look at phase 2. Phase 2 application starts from the financial year 17-18 onwards. Date of first adoption of IND AS is 1st April 2017. And the date on which first IND AS financial statements are drafted is 31st March 2018. So you will check for the listing status either at the beginning of the year, 1st April 17, or towards the end of the year, 31st March 2018. Based on the listing status, you will decide whether the company has to adopt company's IND AS rules 2015 or shall continue to adopt company's accounting standard rules 2006. Look at the first scenario. So, 1st April 17, 31st March 18 are the two most important dates since the company has a net worth of less than 250 crores. First point where he's saying it is in the process of listing at the beginning of the year, but by the time it came towards the end of the year 2018, the company is listed. Therefore, in the first scenario, I can say that XYZ Limited has to comply with IND AS under the category of phase 2, where it shall draft IND AS financial statements starting from the financial year 2017-18. If I am drafting the first IND AS financial statements for the year 17-18, I will have to also prepare comparative financials for the year 16-17. The date of transition in this case of XYZ is 1st of April 2016. 16-17 comparative period, 17-18 current year, where the IND AS first financials are drafted. That is the answer to my first question. What about the second question? The company shares are listed at the beginning of the year, but they get delisted during the year itself. Guys, at the beginning of the year, 1st April 2017, when you are trying to apply or when you are checking the application of IND AS, this rule is satisfied because at the beginning of the year, the company shares are already listed. Therefore, irrespective of whether the shares are delisted subsequently or not, once applicable under IND AS, always applicable under IND AS. You cannot roll back to your IGAP again. Therefore, since at the beginning of the year, the shares of XYZ Limited are listed on 1st April 17, therefore, IND AS shall apply to XYZ Limited starting from the financial year 2017-18 onwards. Clear? Third one. The process of listing began during the year, that is in the month of May, and the company shares were ultimately listed at the end of the year March 2018. Will there be any difference if the company shares will get listed in April 2018? That is, the process of listing also exists at the end of the year. Guys, at the beginning of the year, the company shares were neither listed, they were neither in the process of listing. Okay, they were neither listed nor in the process of listing at the beginning of the year. During the year, that is in the month of May, they started the process of listing. If the process of listing is completed by the end of the year, by the end of 31st March 2018, since the company is already a listed enterprise, it shall start adopting IND AS for the financial year 17-18 as it is under phase 2. Now, what if the company shares get listed in April 2018? Even in that scenario, as on 31st March 2018, though the company shares are not listed, they were in the process of listing. Therefore, it is necessary for the company to basically comply with IND AS or to prepare the financial statements and compliance with IND AS for the financial year 17-18. The company issued listed debentures in the month of May 2017. However, by the end of January, the company debentures got delisted. At the beginning of a year, 1st April 2017, were the debentures listed? No. When did the debentures get listed? During the year in May 2017. What about the end of the year, 31st March 2018? By the time 31st March 2018 came, the debentures were already delisted. Therefore, neither at the beginning of the year nor at the end of the year, the debentures or shares of this company are listed or in the process of listing. Therefore, it is not possible to apply IND AS or to prepare financial statements in compliance with IND AS. Therefore, per point D, XYZ Limited will prepare its financial statements in compliance with your company's accounting standard rules 2006 and not as per company's IND AS rules 2015. Let us read. What was the first scenario? Let's look at the solutions that he has given. First scenario, at the beginning of the year, they were in the process of listing, but towards the end of the year, the company shares were listed. Look at the first answer. In the given case, the company began its process of listing as at the beginning of the year, but had a net worth of less than 250 crores. It shall be required to comply with IND AS for the financial year 17-18. That is what we concluded under phase 2. Accordingly, XYZ shall prepare IND AS financials for the year ended 17-18. What about the second scenario? They were listed at the beginning, but they got delisted during the year. In the given case, since the company has been listed at the beginning of the year, it is required to comply with IND AS from the same year, irrespective of the fact that the company shares got delisted towards the end of the year. Therefore, XYZ shall prepare IND AS financial statements for the financial year 17-18. Clear? Moving forward. The process of listing began in May 17. That is during the year. At the beginning of the year, it was neither listed nor in the process of listing. What will happen if the company shares are listed towards the end of the year? What will happen if the company shares were listed in the subsequent year in the month of April? So I'll break this into two parts. First, they got listed during the same year. So in the given case, although the shares were neither listed as at the beginning of the year, nor it began the process of listing, but it began the process of listing during the year and got listed by the end of the year. Therefore, it shall be required to comply with IND AS for the same year as it began the process of listing. Furthermore, in case the company shares get listed, say in November, that is a for say situation, he did not say anything like that. Okay, if it is listed in November, then the IND AS financial statement should start preparation from the quarter ended in December 2017 itself, and consequently year-end financials will be prepared as per IND AS in March 2018. That means compulsory that company has to prepare financial statements under phase 2 category of roadmap of IND AS. What if the listing happened in the subsequent year? That means in the year 2017-18, it is still in the process of listing. Moreover, in the given pattern, if the company shares are in the process of listing even at the end of the year, then also it is required to comply with IND AS and provide IND AS financial statements for the year 2017-18. What about the last one, Part D? They were listed debentures which were issued during the year but got delisted before the end of the year. In this case, I said you cannot adopt IND AS since the securities are neither listed or in the process of listing at the beginning of the year, nor they were in the process of listing towards the end of the year. In the given case, the beginning of the reporting period, the shares of the company was not listed. However, it issued listed debentures during the year in the month of May, but they got it delisted in January 2018 itself. Accordingly, the company never had a status of a listed enterprise or was in the process of listing either at the beginning of the year or at the end of the year. Hence, it does not require to comply with IND AS. It will prepare its financial statements only in compliance with Companies Accounting Standard Rules 2006. Clear? Now, this is a very, very important and a comprehensive paragraph which is dealing with enterprises which are listed or in the process of listing during the year. Clear? So, let's move on or roll into the next question. Applicability of IND AS to an NBFC in case of termination of membership. Now, what is this termination of membership? You liquidate, I will tell you what it means. The company was a registered stockbroker with SEBI and the net worth of the company is 500 crores. That means it belongs to phase 1 criteria. As per IND AS rules, it was phase 3 criteria because NBFC, it is a stockbroker. So phase 3 criteria should start preparing its financial statements starting from the year 1819 onwards. Here, date of transition is 1st April 17. First IND AS financial statements drafted for the year 1819 on 31st March 2019. Look at it. As per IND AS rule, it falls under the IND AS roadmap of NBFC and accordingly will apply IND AS starting from 1st April 2018. In the month of June 2016, the company applied for termination of membership to the exchange. It was awaiting clearance from SEBI as of June 2017. Guys, he applied it in July 2016. He is still awaiting the clearance for termination of membership even in June 2017. It received the clearance from the board in August accepting their termination. The company also had listed debt securities. Whether the company has to prepare IND AS financial statements as per phase 1 of non-NBFC as per 31st March 17 when it has applied for the termination of membership with the exchange with July 2016. So what he's saying is, if you say this is an NBFC, then it falls under phase 3 category. That means it has to start preparing its IND AS financial statements for the year 1819 onwards. If you say, sir, they have already applied for cancellation of membership, so it no longer pertains to an NBFC category, then it should have fallen not under phase 3, but should have fallen under phase 1 itself. That means they should have presented their IND AS financial statements from 2016-17 itself. Now my question is, which of the answer is right? Should this enterprise or should this company belong to a phase 3 category or should it belong to a phase 1 category? If you have a confusion, let me explain. I'll tell you why phase 1 and phase 3. I am talking about an enterprise which had a net worth of exactly 500 crores. Correct? Now, there are two types of IND AS applications which I can go with this. First case, if you say that this is an NBFC. Second case, if you say this is other than NBFC. If you call this as an NBFC, then it falls under phase 3 category. That is, the application of IND AS shall start from the year 2018-19 onwards. But if you say, no, this is not an NBFC since they have already applied for cancellation of their license with SEBI, then in such case, it should have fallen under phase 1 category. That is, it has to prepare its financial statements in compliance with IND AS from 2016-17 itself. Significant effect would happen if they cancel the NBFC license, because the application of your IND AS shall apply starting from 16-17 itself. But if it was an NBFC, then it would have happened from 17-18 only. Now my question is, which one of this is actually true? Just a second. I'll go back to the previous sheet. Yes. Now you can see it. Now observe what is the given case. He is saying it was actually a registered stockbroker. But from July 2016 onwards, they have applied for termination of membership. Guys, what do you mean by termination of membership? That means they are no longer carrying out any activity related to NBFC. Whatever license you granted me as a stockbroker, you revoke the license or terminate the license. I am no longer a stockbroker now. So I have stopped all the activities which are connected with an NBFC. That is when SEBI will accept your termination. But however, if you look at, it was awaiting clearance from SEBI, and the SEBI clearance was only received in August 2017. Now my question is, since 2016 of July itself, since they did not have any NBFC related activity and have already applied to the SEBI for revocation of their license, should I call it as a non-NBFC, comply with phase 1 criteria, start preparing IND AS financial statements from the year 2016-17 onwards? Or, since the cancellation of his license happened only in August 2017, until then it was still an NBFC, was not falling under the criteria of phase 1. So therefore, you can exempt it and can only start complying with IND AS starting from the financial year 18-19 onwards. My answer to this question is, if they have applied for the revocation of the license, whether they have a stockbroker license with the SEBI or not is immaterial. It is immaterial. I cannot be classified as an NBFC as long as my activities of the company are not in compliance with the definition of NBFC given by RBI Act. I am doing an activity which is not connected to the NBFC definition. You cannot classify me as an NBFC even though I hold a license. Substance over form. In form, I might be a registered enterprise, but in substance, I am not carrying out any activity. So therefore, you cannot classify me as an NBFC. Since this enterprise has applied for the revocation of license in 2016 July itself, I would expect that the company is not having any activity related to the NBFC starting from that date. Therefore, it is a non-NBFC as on July 2016. Therefore, has to fall under the category of phase 1 and should not fall under the category of phase 3. That is my conclusion. Read the answer. I gave you why I believe so as well. In the given case, the company, being a stockbroker, was falling under the definition of NBFC as per the above rules, and hence, as a part of the network, was being complied with starting from 1st April 2018. That is phase 3 company. However, in the given case, in July 2016, the company has applied for termination of its membership as a stockbroker. Accordingly, it needs to be evaluated whether the company is carrying out any activities of an NBFC or not. Now, who will define whether the activities are qualifying under NBFC or not? RBI Act of 1934 will give you the definition of NBFC. In the above view, it is persistent to note that the definition covers a company which is carrying out an activity of NBFC. The definition of NBFC is given under the RBI Act 1934. Hence, a company which is carrying out any activity of NBFC but not registered with RBI will also be subjected to roadmap of application of IND AS as it was applicable to any other NBFC. Substance over form. You might be carrying on the activities of NBFC, not registered with the RBI, but still I will apply the roadmap for any other NBFC to you. However, the requirements with regard to registration, eligibility are governed by RBI Act and rules laid thereon should be evaluated by the entity based on its own facts and circumstances. In accordance with the above, if the company is carrying on the activity of NBFC during the period it awaited an approval from RBI, then it shall be required to comply with the IND AS as per the roadmap of NBFC. However, if it ceases to carry on activities of NBFC, then the roadmap of non-NBFC should be followed based on the net worth. Right? That is what we said. Two cases that we have given. NBFC, what is the case? Non-NBFC, what is the case? When do I apply NBFC? Whether you are registered or not, if you are carrying out the activities of an NBFC as defined under RBI Act of 1934, then I will apply phase 3 for you. If you are not carrying out any activity defined under NBFC of the RBI Act 1934, then I will put you under a non-NBFC category under phase 1. In the given case, assuming that the company was not carrying out any activities of NBFC starting from July 2016 onwards, and where it applied for termination of membership, then its net worth should be complied with for IND AS purposes starting from July 2016 onwards. That means it shall be categorized under phase 1 category as a non-NBFC since they have applied for a termination of registration with SEBI as a stockbroker. Clear? All ifs and buts answer he has given. Now, this will have a lot of impact, guys. Look at the next question. Investor company, fellow subsidiary of a holding company. Look at this. Company B is a listed entity covered in phase 2 of IND AS roadmap. Company A is an unlisted entity having a net worth of less than 250 crores and holding company of B. So A is holding B. A is not falling under any of the roadmap of IND AS, but company B is covered under phase 2 of IND AS being a listed enterprise. Company D is an unlisted enterprise, holds 25% of company B. That is, company D is an investor company to entity company B and has a net worth of INR less than 150 crores. Company C is a fellow subsidiary of company B, that is the subsidiary of a holding company A. Whether IND AS is applicable to company C and company D. Let us look at this. What did he say so far? He started the entire progress with company B, right? It is a listed entity. Therefore, it should be covered under phase 2 category irrespective of its net worth. Okay. It was controlled by a holding company, company A. Company A holds at least 50% of voting power or has a control. Right? There is another company C. Look at what did he say in the question. He said there is another company, there is another company D which holds 25% of shares in B. I'll switch back to the question and I'll show you. So this is what it showed. Company A is an unlisted entity and is a holding company of B. That is what we have done. Company D is an unlisted entity, holds 25% in company B. That means company D is an investor entity of company B, but had a net worth of less than 250 crores, not falling under the criteria of your phase 2. There is a company D which holds 25% of voting power. So this D will be an investor entity. Investor, and B is called as associate. What about the next further point in the question? The further point in the question, he said, company C is a fellow subsidiary of company B. That means a subsidiary of holding company A. So let us see. So another fellow subsidiary is there. Here I'll add company C. Even here also there is a control. Who has to comply with IND AS actually? It is entity B who has to comply with IND AS. So when I say it is of entity B which has to comply with IND AS, then it should include a holding company, it should include a subsidiary, its joint venture or its associates. Correct? All these companies which form part of the group of B should compulsory comply with IND AS. Should A comply with IND AS? Absolutely yes. It has to comply with IND AS under phase 2. What about C? C is a co-subsidiary. Should I apply? Here you can voluntarily apply. Why voluntary application? Voluntary application because as such it does not apply, but to facilitate consolidation, it is better you apply phase 2. Otherwise, you have to prepare 2 sets of financial statements, one standalone for C under company's accounting standard rules, and subsequently as per IND AS following your company's IND AS rules 15. What about D? Guys, D is not an associate of B. D is the investor of B, right? Associate of B, yes, it should be complying with IND AS. If B has another associate, that means if B holds 20% voting power in another entity E, then this is an associate. E has to apply. But here it is a reverse situation. B is an associate of D. Such case, D need not apply IND AS. Now, you will come up to me and say, if D never applied IND AS, but B is applying IND AS, no? Yes. But D, which has an associate in B, should comply with consolidation? Yes. Then how will D consolidate when B is preparing as per IND AS and D is only preparing as per IGAAP? Absolutely right. Therefore, the listed entity B should prepare 2 sets of financial statements. One, a separate set of financial statements drafted as per IND AS. Another set of financial statements as per IGAAP to facilitate consolidation as an associate with enterprise D. Clear? So what did I say? A, B anyways as per phase 2. A, since being the holding company, should compulsory comply with IND AS. C, voluntarily can adopt only to facilitate consolidation with enterprise A. But D is not an associate of B. B itself is an associate of D. Therefore, D need not apply IND AS. But since it had to consolidate with its associate, B Limited, which is preparing its financial statements under IND AS, should also prepare a set of financial statements under IGAAP, which is in compliance with Companies Accounting Standard Rules 2006, to facilitate consolidation as a subsidiary with entity D. Read what is said over here. Read through. With regard to IND AS application of Company C, it may be noted that IND AS applies to holding, subsidiary, joint venture and associate of a company which meets the net worth or listing criteria. The requirement does not apply to the fellow subsidiary of the holding company, which here we said is C Limited, which is required to adopt IND AS because the holding company's relationship with the subsidiary meeting the listing criteria. The holding will be required to prepare a separate financial statements and consolidated financial statements mandatorily under IND AS if one of its subsidiaries meets the satisfied criteria. Therefore, such subsidiaries may be required by the holding to furnish financial statements as per IND AS for preparing consolidated IND AS financials. So, therefore, the fellow subsidiary may voluntarily adopt financial statements to be prepared as per IND AS. Otherwise, he is required to prepare two sets of financial statements, one under IGAAP normally for separate financials and other one for IND AS to be consolidated with Company A. Hence, in this case, C is not mandatorily required by the statute, but C can voluntarily adopt your statutory reporting under IND AS. With regard to IND AS applicability of D, it may be noted that D is not just an investor company, but is just an investor company and does not qualify for a holding company of B. Therefore, D is not required to comply with IND AS by virtue of Company B falling under the threshold of IND AS applicability. Furthermore, for consolidation purpose, with whom B Limited has to consolidate with B as an associate. To provide that consolidation purpose, B Limited should provide financial data in accordance with Companies Accounting Standard Rules 2006 for Companies D's consolidation purposes. Clear? That is exactly what we have discussed in detail here. So, I'll repeat what is the conclusion. Company B falls under phase 2 criteria. Yes. Company A, being the holding company of Company B, should comply with IND AS. Yes. C is a subsidiary of Company A. Is Company A applying IND AS because its net worth criteria is satisfied or the listing criteria is satisfied? No. Company A is only applying IND AS because it is a holding company of Company B, which is a listed enterprise. Therefore, you cannot pass on the application to Company C. However, since Company C has to prepare two sets of financial statements, one separate financial statements under IGAAP and also under IND AS to help the consolidation with its holding company, it is preferable to go for voluntary adoption or voluntary application under phase 2. Enterprise B is not an associate of B. If it was an associate of B, yes, IND AS is applicable. But B itself is an associate of D. Just because my associate is applying IND AS doesn't mean that the investor entity shall start adopting IND AS. Therefore, you need to understand that D shall continue to prepare its financial statements under IGAAP or Companies Accounting Standard Rules 2006. But since D has an associate in B and is required to prepare consolidated financial statements, B, apart from preparing its financial statements as per IND AS, should also prepare financial statements or financial information under IGAAP to facilitate its consolidation with Enterprise D as an associate. Clear? And that will bring us to the end of ITFGs that we have to discuss regarding the roadmap of IND AS. We also have ITFGs which will relate to computation of net worth that we will see now. So,